Hello guys, welcome to the Pivot Trade, the channel that teaches you how to benefit from trap traders, and we will be starting with the price action analysis of Nifty today. And so many times I have told you to be very careful when the price opens outside or around the PDL, because you can see a lot of action around that area. So the PDL is this level here, that is the previous day low. That is the lowest point that the previous day has made. So that is the point where this particular candle, the 10 AM candle yesterday, from where price had bounced, and so that is the place where the low of the day of yesterday's session lies. And Nifty today opened exactly around that area, and it was not a very strong candle at all. Could you see this to be a very strong candle? Absolutely not. It was a very weak kind of a candle. It was definitely not strong enough to show that there were a lot of sellers in that candle. That candle did open inside the previous day's range and it closed outside it, but still it did not show much strength. And you could see here that the Virgin CPR from the 27th of June was coming right below it, and that Virgin CPR really cannot be the reason for the price to bounce from that area. So here this kind of a reversal from the Virgin CPR for this narrow a Virgin CPR is really unseen, but incidentally it happened to bounce from that area, and then you could see that the entire day price really did not come back to that area at all. And what was it from the day's low to the day's high? We can just measure the points in Nifty today. It is somewhere around 175 points. So that was a good bounce in Nifty. And what was the bounce like in Nifty yesterday? Let's check that out also. If this is the low that Nifty made yesterday and this is the high, it was about 180 points. So back to back days Nifty has actually opened and bounced from around the same area. So that is around the same place from where Nifty has bounced on back to back 2 sessions. And you could see that we had marked a dotted line here. That line was broken and then price actually reversed and it went up. So no clear sign there in Nifty, no clear indication as to why the price had bounced at that level at that time particularly, but it had bounced from the Virgin CPR that we had seen forming from the 27th of June. Okay, and you could see how price had actually broken out of the range here. If you see, then this was the high of the red candle. This being the high, you could see that none of these candles had actually closed above the high, and even here you can see that there is a small wick here. So what should you do at such times? You should remove that line and place it above the wick, and you could see that this was the candle that actually went up and closed outside that particular red candle's high. And then you could see how the S1 pivot also did not hold and price went and hit the CPR. So no real price action to be studied in this kind of scenario here. We just saw that it was a weak opening red candle. Had this been a strong candle, then we would have said that there was a lot of sellers in that candle, right? But obviously you cannot see a lot of sellers in this particular red candle here, because the candle isn't big anyway, and you can see that there are long wicks on the bottom. So you can see that there is buying coming from the bottom right since the first candle itself. And usually what you can do is you can wait for the high to be taken out here, and then you can take a long trade. Why? Because if the price is pushed down by the sellers in the first candle itself, you can see that the sellers had actually pushed the price down here and closed below it. That is, closed below the level of the PDL. If this is the PDL and the close is here, then this level is below this level, right? So what will a lot of traders do? They'll want to jump into this particular or this specific red candle, the first red candle, but you don't see the body that is big here. You need a big strong body there to be able to analyze price action. So something like this is another story. So then waiting for this particular strategy where you wait for the price to reverse back to the high and then you can take a long trade once that high is taken out, is a strategy that I have discussed, and you can go into the strategies section and check that strategy. But this particular candle does not instill too much confidence in me to take that kind of a trade here. And also the fact that Bank Nifty had a severe bullish candle, the first candle itself, until the Bank Nifty had a severe bearish candle. The red candle was very strong in Bank Nifty, and the price had not really gone down or gone up beyond that level of the high of that candle. You can see the 9:15 a.m. candle here in Bank Nifty. You can see how big, strong and red that candle was. So price hadn't really taken out the high of this particular candle when Nifty had taken out the high. Here, when price had taken out the high at 9:40 a.m., you can see that at 9:40 a.m. Bank Nifty right here was still struggling. So it was in a particular consolidation zone here. It was going sideways. And so this particular candle has a lot of sellers in it, and these sellers are going to ensure that this price or this high is going to be defended very strongly. So let's talk about that when we come to Bank Nifty, but for now we can tell in Nifty that the 9:40 a.m. candle really did not have any support from Bank Nifty. Bank Nifty had not broken out, so this particular candle, a trade in this candle was not really the very high probability trade to be taken. And then you can see that Nifty actually kept making higher highs and higher lows and kept going up the entire day, and then there was a time when it actually went sideways for a long time, and that breakout from CPR also failed here, and then it kind of reversed, and you can see how the day has closed here. So in spite of a 175 point rally in Nifty, Bank Nifty did not really go anywhere, and you could not really say the same about Bank Nifty. Bank Nifty did not really rally or rise as much as Nifty has risen. So as of now, for tomorrow, we can see that there is a specific narrow CPR about 18 points, 17 to 18 points in Nifty, and we can see that there is no virgin CPR in coming from today's price action. But this PDL is now going to be an important level here. So we definitely want to mark that PDL. That is going to be an important level now, since price has taken a complete U-turn there, right? So price has bounced from here suddenly. It is a total U-turn, and you could see how price had actually closed here and it opened here. So there was a gap there between that close and the open, and we can measure that gap. See, this is the close, since it's a green candle, and this is the open. It's about 160 points. So you can see that 160 points the price had fallen even before the day opened, and and it actually went below the previous day low support also, and from there it bounced. So you now know that at this level, which is the PDL of this day, there are a lot of buyers who are active. So this is a buyer zone. So what we will do is we'll mark it with a green line here, and we will keep it solid, because we know that from tomorrow, from today's price action, tomorrow will also take support at that level. So you definitely want to have a solid line there, and we don't have a particular supply zone on top today because price has not really fallen from there, but the PDH and PDL are anyway important levels, just like CPR on any day. And you can see how price actually kept going sideways within the CPR, and you can see how a very weak candle broke out the CPR. So if you're thinking, or if you have taken a CPR breakout trade today, then that was not a very wise thing to do, because you can see how this level has actually acted as a strong resistance throughout that level. Because see here, if you're wondering why your trade on this particular candle failed, if you had taken a breakout from CPR today, which is this candle I'm talking about, then let's just mark this high here, and I'll tell you why it couldn't work, because this was not the resistance anymore. It was this that was the resistance. Now this level was broken, not really broken by this candle at all. Can you see that level broken? It cannot be seen as broken, right? Even if you see a very small tiny body part here of the wick, below the wick of that candle, that is not really a convincing breakout. So what do you do next? You take that line, you keep this resistance up here. Now you can see that only wicks have gone past that resistance, and you can see that the resistance has now gone, the fresh resistance has now gone to this particular candle's high. And now can you see any candle closing above it? So basically above this particular wick there is no body close, so you don't find a candle closing above that level at all, and that is why there was never a technical breakout from the CPR today, and the CPR has held as a resistance today, which is held as a strong resistance today. So if you're wondering if you've taken a long trade here, then that is not the right trade, that was not the right trade to take, and the reason being that that resistance has never failed you, that resistance was always there. Let's check on the 15-minute time frame. You can see that clearly on the 15-minute time frame a lot of green candles there, so this is definitely a strong demand zone as of now, and we do not have any gaps or versions CPR to be marked. We do have a big gap here that is left, so it's a very wide gap, and price is now very close or trading very close to that gap. You can see here on back-to-back 3 days price is really trading within that particular zone itself. It hasn't really gone anywhere. And now we can see on the daily time frame, if we check it out, let's just turn off these indicators. Let's see here on the daily time frame, you can see that this is a strong support now, okay, with the one that we have marked, and two green candles there. Bodies look pretty healthy, although it does have wicks on the, both these candles have wicks on the top, but that doesn't really truly worry me. I don't see it really falling from this place, so I know that we have a lot of supports going down now, but truly price has not really gone anywhere. It's still within that same region. Right from 13th of June we can see that price is really trading in the same area. This is 29th of June now. June is about to end. Tomorrow will be the last session, and we don't really see any sort of movement in price to the upside, neither to the downside here. So it's just going in one specific area here. So I think this is clear to you, the sort of price action that we had in Nifty today, and we will go over to Bank Nifty now. So now in Bank Nifty you can see that it was a big red candle that had opened outside the previous day's range. Okay, this was the open, this is the close. This is pretty much for the beginners who are watching this channel. And see, whenever it happens that the price opens outside the previous day's range and it opens with a large red candle, it suggests to novice traders or to the inexperienced traders or to the rookie traders that this particular red candle has a lot of selling strength, and so this bearishness invites them into shorting after the close here. Okay, so when they short at the close here, where do you think they will keep their SLs? Most probably they will keep their SLs above this high, which will be a very big SL. Okay, and a few of them will keep the SLs here, because you can see that there is an S3 pivot here. So if they are really working on pivots, then there will be a lot of SLs in this area. So basically all this area up to here or even above the S2 will be an SL rich zone. So this entire zone will be an SL rich zone. So usually what happens is when price opens gap down so much and it closes beyond the S3 pivot also, and without touching the S4 pivot, price actually starts taking on support at this area, and then after a long time it starts to reverse. It actually breaks the S3 pivot's resistance now, because S3 is a support which has been broken here, and now it is a resistance, because in technical analysis support becomes resistance and resistance becomes support. Now now this candle's low becomes a very important low for price. So because you can see how the resistance here has acted strongly, and it was only this candle that broke through that resistance, isn't it? So you have to mark this candle's low as an important support now, and once this particular wick has taken support at that level, you should mark this candle's or this wick's low as an important support now. Now that becomes an important support. So once price breaks through a resistance, that candle's low is an important support, and when some candle actually tries to close beyond it but doesn't close beyond it but actually makes a wick, you should mark that wick off as an important level or an important support there. And then what happens here is, usually what I do is I usually wait for the price to reverse back to the high of the red candle here. So what you should do here is that whenever you see such a price action, you should mark off the high and the low of that candle. Both the high and the low of that candle are going to be important areas. Okay, and the high and low are important because that range has not been broken for a long time. So you can see how Bank Nifty kept going sideways throughout the entire range, and you could see that there was a false breakout at this region here. Usually when there's a false breakout in that area, you will be able to see that when price actually takes out the low of the breakout candle, which happens to be here. So if that low is taken out, then the price will tend to fall. Why? Because when this high is taken out, when the first candle's high is taken out, a lot of breakout traders will tend to enter thinking that it's a breakout, and they would want to collect their profits right at the PDL or at the CPR, because we usually see that when this sort of a breakout occurs, the price will usually tend to rally right up to the previous day low at least, and the previous day low, because it's the previous day's range, it's going to act as a strong resistance. So three most important levels for intraday traders are the PDL, the PDH, which is right here, and the CPR. This is the most important level, the three most important levels for intraday traders. Most of the action will occur around these areas. So whenever you see price trading outside of those or away from those ranges, you should have a bias towards the side that whenever that is happening, the price will, if there is a breakout, try to reach one of these three levels. So if it's from the upside, then it will try to reach the PDH. If the PDH is broken, it will come down to the CPR, and from the bottom it will try to reach the PDL if there is any breakout below it, and it will tend to reach the CPR if there is a breakout from the PDL as well. So really it is a very simple fact to understand, and you will start understanding it once you start understanding price action. So now let me explain why I said that this particular high, when it was taken out by the green candle, was not a good trade to take here. It was not a good trade to take because it was the 12 p.m. candle. And what was the 12 p.m. candle doing in Nifty? Let's go ahead and check in Nifty. See, this was the 12 p.m. candle. Where was it? It was at an important resistance. What was the important resistance? It was the central pivot in Nifty. The central pivot is what we call as PP, and the top central pivot is what we call as TCPR, and the bottom central is what we call as BCPR. This is a range. The entire range is important. Okay, so start using the CPR, the central pivot range. It will completely transform your trading. And when you see that 12 p.m. candle is struggling at the CPR or hitting the central pivot exactly, then you should avoid the trade in Bank Nifty as well. So going back to Bank Nifty, this was a 12 p.m. candle which actually broke out, but that breakout did not really work out because of that CPR in Nifty. And then you can see how price actually went down, then took a swing, came up, then the S2 pivot again provided a strong support, which was also a demand zone coming from the past. So if you go back, you can see here that it was not particularly a demand zone, but it was a strong support. I had said in that video that I'm not marking it as a demand zone, but it's a dotted line. So 24th of June, we had marked this candle's low, which was a strong green candle. I had said that these two levels will be important levels. And now when price comes from below it, that support or strong support, which was unclear whether it was a demand zone or a support only, has acted as a strong resistance. So it does not matter whatever it was, demand zone or support. Anyway, it has acted as a strong resistance. You can tell that from this particular candle. And we had marked this entire zone off. So I had told you in that video that we have to mark this entire zone. It's an important zone. So you can see these two levels that I had marked here. I had marked this candle's low also and this candle's low also. So this entire zone was going to be important, and you can see how exactly within that zone this 1:10 p.m. candle has taken resistance, and then price has not been able to reach that high at all throughout the entire remainder of the session. So you could see how Bank Nifty took support and then it went up right up to the high of the day. Then it gave a false breakout from the high, which was right here, and then it fell down again, and then it kept going sideways rest of the day. Nothing really to talk about the price action in the rest of the day, but whatever action has happened in the earlier half of the day itself here, right here. So was it good to take a reversal trade here after this candle's breakout had failed? I'll tell you what you can do here. Once this candle breakout fails, you can mark off the low of this candle and you can see which candle closes outside it. Now this candle closed outside that low, but does this candle really mean anything? Because see, once this candle's low was, this candle's low was here, right? And this particular candle made a low below it. So what will you do? You will mark this candle's low now. So now this candle's low is important. Now this candle's low or wick comes down below it. So you have to mark this candle's wick. And now finally, which is the candle that closes below it? This candle is the candle that closes below it. You can see here, I'm zooming it for you. And the candle that was closing below it is a 12:20 p.m. candle. So is the 12:20 p.m. candle really tradable? So if you were to trade a candle which was breaking out and then reversing, you should be able to see a strong candle closing outside or below the low of this green candle, right? But you could see that this was a very weak red candle that was closing outside this particular wick. So if you haven't understood why I am saying that this is the candle that broke out and not any other candle, not this, not this, not this, but this here, then go back a few seconds and watch this video again. You will realize why I'm saying that this is the breakout candle. And you could see that this reversal candlestick which broke out from the low that had been created before or during the breakout here was not really a strong reversal kind of a candlestick. It should be a strong body red candle. Okay, only then you will be able to see a strong reversal. So it should be something like this, or if you want me to show it in red color, then it should be something like this, or a strong bodied candle. A small wick or something below it is okay, but not a very big wick. And so you should understand that such a candle is not a tradable candle, so you should not short below this candle. Normally what you can do is, if you see that there is a breakout candle, so if this is a breakout candle here and it has broken out of this particular range here of the high of this red candle, then what would you do? You would know that a lot of people who have gone short in this candle will be trapped here, right? And you want to ensure that you are benefiting from these trap traders. This is what the channel is all about. This is what our lookout is. So you would want to go long here, right? But since you know that there was CPR in Nifty, you would not get trapped going long. You would know that the breakout would fail. So now you are waiting for the trapped breakout traders to give you a profit, right? So whenever you see that there is a breakout in Bank Nifty, like there were people who will be trading on the 5-minute breakout, so first candle opening breakout, so then here you would know that a lot of traders who have gone long will have their SLs in these areas below it. So now again you have an SL rich zone to benefit from, and so you want to go short once that breakout from that level fails. That is what one strategy can be. So you want to take a short trade, and that is the reason why you want to make sure that there is a strong red candle that closes outside the false breakout candlestick, that is below the low of the false breakout candlestick in this case. And that is why you want to go ahead and short this candle. But this candle itself, price action is telling you that it is a weak seller's candle because of the wick on the bottom. What does a wick on the bottom suggest? That there are buyers supporting the price at this range, because you are finding that buyers are accepting this price and they are wanting to buy at this level, hence the wick on the bottom. And you can see as buyers have been accepting this price, they are buying at this level, and so the price is reversing from there and it goes and hits the S2 pivot, which is also a strong support or demand zone coming from the past, and then price actually takes another swing and resistance here, and then it falls again, takes another swing and then falls again. So basically it has not really gone anywhere. It's been a tennis match between the buyers and the sellers. All right, I think that's clear enough for you how you should be reading price action. And even if you spend the entire day sitting around and waiting for something to happen and it doesn't happen, don't feel bad about it. That is the market, that is how it is going to work. So see, I think we need to align this level a bit higher now. You can align this level here, because you can see that the wick is now this area is now important. See, if you want, you can have this area also marked, which is right here, but since the R1 pivot is right there, you can actually let that area go. Why I'm saying that, because see, this candle's low has not really been violated yet, right? It has not been broken yet. So you can actually place another level here, but it will just keep adding to your confusion, adding levels, more and more levels there. So instead of that, what we can do is we can place a level here, because you can see that price has actually taken a resistance there and it has fallen, right? So it has fallen how many? Around 190 points in Bank Nifty. So what we can do is we can mark that level in red instead of green, and we can assume that it is a small supply zone there, and you can keep an eye out on that level, the PDH, that is the day high of today, and we will definitely mark the PDL as a strong support or a demand zone. Actually, we should call it a demand zone, because price has gone up from there. We will see how much it has gone up. Let's say this is the low and this is the high of this day, then it has gone up around 230 points. So it's around 230 points that price has, or more than that, that price has rallied. So let's mark this area or this line in green, and we will keep that level ready. But I'm still marking it in green, in dotted, because it's not a very strong one-sided rise as much as we saw in Nifty. So I am marking that area, but it's obviously not a very big demand zone or anything like that. But the price has definitely reversed and taken a U-turn from that level after this particular red candle. So a big selling has been converted into buying here, right? So that's why this low is an important support. So that's the least that the area is worth. It could be worth a lot more. So you want to definitely be careful tomorrow when price comes to it. Another day we see that it is a narrow CPR. Since a long time we have seen narrow CPRs forming. It's around 24 points. The reason being that price just keeps going in a tight range. Yes, you could see a lot of volatility, ups and downs, a lot of choppiness in price. But if you are a trader who really works on only one particular directional strategy, then there is no reason to get trapped in such kind of price action. It is fine to not get worried about it, even if price is going in the same area. And intraday you see a lot of choppiness, because basically you'll be sitting at the edges, at the very borders, and you will be trading at the very extreme borders. So either you will be selling high or buying low. Whatever happens, either way, there is no reason for you to get trapped in such kind of markets. Okay, we'll just take a look at the 15-minute time frame now. I don't see anything different coming out from that. Or the only thing that we see here is that we have a virgin CPR from today's price action, and we will mark it, but it's a very tight virgin CPR. We'll mark it nonetheless, since we have seen that the price bounce today in Nifty from a very tight virgin CPR, and that is the virgin CPR that we are marking. It's a very, very tight virgin CPR. Okay, nothing different coming out from the 15-minute time frame, and we have a virgin CPR coming from the 24th of June here. So tomorrow being the 30th of June, it's not yet very old, so we will keep that and we will extend that. Above here we have a virgin CPR coming from the 28th of June, right? That was just yesterday, so that's a fresh virgin CPR. Alright, I think that will be all for the price action analysis in Nifty and Bank Nifty. I hope it's clear to you how price action works. If you are finding it difficult and challenging to trade, please go and watch all the videos on this channel. These EOD videos are extremely important. They are an integral part of this channel. They teach you exactly what you're supposed to do, how you're supposed to read price. And please go ahead and reach out to the strategies section. If you need a strong strategy, then you can find the strategies section very useful for yourself, and you can also go to the educational section. There are a number of videos there, so please go ahead and watch all those videos. If you like this video, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. Please do leave your comments in the comment section below if you like this one, and for your doubts also, I can clear them out. Thank you guys. Have a nice day ahead. Bye bye.